In today's video, we're going to discuss how to play catch up to the NASDAQ. All right, I'm up 19% for the year still. I'm not worried about that, but I still want exposure to these high growth themes. And if they're there and we have an ability to get exposure without raising margin too much, then I'm going to try to do it. So as you know, we use margin here, a little bit of margin to get our income. We earn over 100,000 per year in dividends, and I use some margin to get this margin purchasing power that every brokerage gives you. I use a portion of this margin, and our performance and value, you'll see that we're up 19% for the year. Dow's up 0.4, S&P's up 9, NASDAQ's up 21. So I'm trying to catch up to the NASDAQ, okay? I'm trying to catch up just, again, because why not? If I have the ability to, if there's a way to maneuver some of the equity in my account and work some magic, why not, okay? So let's see if we can do that. If you need help on margin and on Cornerstone, I have those e-guides. Once again, email me at aikentod48@gmail.com. So we go to our positions, and you'll see that we're up 0.36 for the year, for the day, sorry, and the NASDAQ is up. The Dow's up 0.01, the NASDAQ's down 0.27, and the S&P's down 0.25. So we're up when the market's down. Why is that? Because Cornerstone, one of my favorite funds. Briefly, I just want to show you the advantage of Cornerstone. The drip right here, see that $6 every month they pay the dividends, $3,500 in dividends for each fund, Cornerstone, that we have CLM, CRF, and they drip it at the NAV. They reinvest the dividend at this $6 price. These $6 prices, I didn't buy here. They invested it for me, okay? So the real price of Cornerstone is around $7.87. So you're getting these automatic profits each month when you drip the shares of Cornerstone. So that's how I'm getting that performance. In addition to the drips, I'm using margin, as you know. Margin of 259,000 roughly, just call it 260,000. So I'm using some of that margin, some of this purchasing power here, and I'm just making sure that this number stays high enough. Again, if you need help with margin, email me for e-guides. So now this is my plan to catch up to the NASDAQ, okay? OARK is one of my big growth plays. I want to add to this sum because the Cathie Woods ARK funds are starting to move higher, okay? 22,000 we have in OARK, and it has a 30% dividend, so it's a large contributor to our estimated income. But let's go look at ARK. And remember, I made a video about a month ago or a few weeks ago and asked if ARK had topped out, if OARK had topped out. And as you can see on this max chart, it's really cheap. But on a one-year chart, you can see it's right up against resistance of this orange line, this 200-day moving average. So yes, we've had a strong move, okay, but I'm waiting to buy. As you know, this is going to act as resistance, probably. See how it hit the orange line and it failed. So it's going to act as resistance right there, perhaps. But you don't know. This could be the breakout because now the orange line, the 200-day moving average, is not downward sloping. See, here it was downward sloping. Here it's downward sloping, the orange line, the 200-day moving average. Now we're catching up to it. So you could see an explosion past it, okay? So I want to be ready for both sides. Some people think that this is the worst bear market ever and this is going nowhere fast, especially with the debt ceiling and all this kind of stuff. Or you could think that that's all behind us and this could explode higher. So there's a case to be made in either direction. Here on this channel, we don't care about the direction because we just collect dividends. The dividends cash flow our names. Now, ARK does not have a dividend. So what do we do about this predicament? How do we add more to tech shares? Also, I want to show you TQQ, this is actually part of the plan. So I'm getting back into the triples. That's my plan. I just had 10K in the triples about a month ago. And then I replaced them with yield max funds, with NVDY, with OARK and TSLY. Now we have NVDA and APLY, but I'll get to that. That's my plan coming up in a second here. TQQ, it's made a move up on its one-year chart, and that's, to me, I just don't want to miss this move. Okay, it's broken out past its 200-day moving average. Okay, this is very positive. If we go to this is the triple though. If we go to, and it's overbought, so you have to be careful here. But if we go to that's why I only bought 1,000. Okay, I'm sizing in, just sizing in, weighting in 1,000, 1,000, 1,000. So is how I'm gonna buy TQQ. But so look at this. The Qs have blown past the 200-day moving average. I made videos here in the past about how we've already bottomed and the NASDAQ may have already bottomed. Go check out those videos. But now we've really made a move higher, and I've had exposure to tech, but I want more exposure. Now, again, this is overbought, so you have to be careful. Okay, we're at the highs. These are the old highs from August as well, so we have to be really careful right here. So we're buying APLY and NVDY to deal with that, but APLY, and as well as TQQ, but APLY doesn't have the dividend yet, and NVDY doesn't have the dividend yet. So I'm waiting to buy those, and they suck up 50% maintenance. And here, when we use margin at this channel, we know that 50% maintenance names are pretty deadly. You know, you want to find the 30% maintenance names. With 50% maintenance, if you put 1,000 in NVDY, it takes up 500 of equity. If you have a 30% maintenance name, it takes up 300 of your equity. So again, email me for margin e-guides if you need help. Performance and value, once again, 19%, okay, 21% for the NASDAQ. So how am I going to catch up to this performance? I'm going to buy TQQ. I'm going to buy NVDY and APLY, but I have to wait till their dividends come out. And plus the NASDAQ's had a large move, so we can't just be buying it at the highs. We have to size in and pyramid in, but without taking up margins. So that's the last component to this video, is how am I going to do this without taking up margin? Well, I was going to sell puts on ARK. So when ARK pulls back, if and when it pulls back, then I'm going to sell some puts on ARK. Yes, I'll have double exposure on it through OARK, up here. But if I buy, let's say, a couple of thousand of, let's say I buy 5,000 of APLY and TSLY, which would increase my income significantly per year. Let's say I bought 5,000 of those in margin, as well as I bought, you know, a couple thousand with TQQ and you know, Fangu. I also have Fangu is another name I'm adding here. FNGU, okay, 1,500 ultimate leverage. Be careful, ultimate decay. TQQ, Fangu, they all decay. Beware. You have to be very careful when you buy these on the dips. You have to buy 1,000, 1,000, 1,000, and then in order to lower my margin, I'm going to sell puts. Not only will I sell puts, which will all give me, you know, hopefully on the dips I can, you know, get 1,000 per contract that I do. I'm going to sell puts, which I don't recommend you guys doing necessarily, but that's what I'm doing to do this. Because when you sell puts, you also rob your account of equity. So you can't just be selling puts and then buying more dividend-paying names. But that's what I do anyway. I'm going to sell those puts, and that made way for buying NVDY and paid for APLY and adding to TQQ and those other shares. So I'll sell puts of TQQ. I'll sell puts of ARK. ARK, and then also I'll sell some things in here. I'll probably sell some, Calm, you know, like, you know, when I'm upgrading to higher quality things, I have to make trade exceptions. I still believe in Calm. I believe in all my stocks. I'll probably put it in my dad's account or something. So because I never like missing out on things. SMHB I'll probably sell. We're already up 8% on SMHB because small caps are moving. I told you guys. You want to get into small caps because they're the last thing to run, as the tech names already took off. So the NASDAQ took off. These small caps are catching up with it. So TNA should be up as well because we sold puts on TNA. It should be higher than this for us, but that'll catch up later. So our other small cap exposure is OARK and RYLD. So this is how we're playing catch up to the small caps. Well, we're not playing catch up. We're playing catch up to the NASDAQ by buying these small caps, and they're helping with performance. But again, I'm going to buy NVDY and APLY and TQQ on any dips from here, and I'm going to sell puts to pay for those. All right. So if you need help with options and anything like that, just, you know, if you buy any one of my e-guides, which I do in a package usually. So everything is bundled. All 4 e-guides come together. My technical analysis, fundamental analysis, which if you need help reading charts or understanding how I even select stocks in the first place or funds, that's in the volume 1 and 2 of my e-guides. And then volume 3 is the margin e-guide, and volume 4 is the cornerstone e-guide. So, but if you just purchase all of those, then you also get my number again. So you can call me anytime. So anyway, and I love doing this stuff. So I'll talk to you guys anytime, all day. I live and breathe this stuff. So anyway, that's how we're going to catch up to the NASDAQ while not raising margin. We're going to sell some puts and sell some other things in the portfolio. And that's hopefully how we'll get extra performance in the account, and also not get that FOMO of have the FOMO issue of these tech stocks just rocketing past, zooming higher, and you're just in passive income names wishing you were in that world getting making money with the tech stocks. I just want to warn you though that the reason why I don't go into the tech stocks all the way is because, again, they don't pay qualifying income. So you can make all the money you want off of tech, but the banks won't take it, and you can't live financially free. The only way I live financially free here and without a job is through these dividends, which the banks take as qualifying income. So I just try to play tech funds that have dividends, like CRF. That's our big tech fund, CRF. And again, they drip at NAV as well. So I'm getting these instant profits at NAV. If you see these 642 lots, 16%, 18%. So this is how I'm playing tech. You just have to play it right with the rights offering. You can't just buy CLM and CRF. You have to watch out for the rights offering. You have to sell before the rights offering and buy back after, okay? It's very easy. But again, if you need my help, you can always call me during the rights offering, and we'll do it together. So anyway, I think that'll do it for the video. Leave comments in the section below if you have questions. If I can't get to them, email me. But if I can't really get to your emails, I usually just say call me, but that's what my e-guides come with, is my phone number. So, but I think that every question you have is in the e-guides. I've even had some subscribers tell me, like, everything I explain in the video is pretty clear and it's in the e-guides. Still, I think they're pretty thorough. I think I wrote it out pretty clearly to where it's a step-by-step way to make money in Cornerstone, as well as use margin. So anyway, email me again at akintod48@gmail.com if you're interested in those e-guides. And forgive me if I can't get to your questions. I'm trying. But that's how I'm playing catch up to the NASDAQ, okay? And I'll talk to you soon. Thanks.